Can South Korea's startup economy deliver? That and more on Korea Technology Weekly. Hi, I'm your host, Dr. J.R. Reagan. In this episode, we'll be discussing South Korea's fast-moving startup ecosystem that's starting to produce its own unicorn companies. There are two main ways, of course, in which venture capital investors reap their rewards. A startup is bought or it goes public. Expectations by investors have grown in the past several years as companies have been acquired or had IPOs. Trillion won deals are happening and Korean companies are on the global map of acquisition seekers. In one example, recently, Baedal Minjuk, South Korea's largest food delivery app, was sold to Germany's Delivery Hero for 4.7 trillion Korean won, which is about $4.3 billion in December of 2019. Baedal Minjuk was the first Korean unicorn, a privately held company valued over $1 billion to exit the venture capital process in an M&A deal. The Korean venture capital scene is on fire. 10-year-old Coupang applied to go public on the New York Stock Exchange recently, and software developer Hyperconnect was acquired by Match Group, the operator of dating app Tinder, 7 years after its launch. Venture capital watchers say the cases of Coupang and Hyperconnect illustrate how the growth models of startups in Korea have wowed the investment world in very different ways. Coupang is applying its business model to its subsidiaries, including its over-the-top or OTT service, Coupang Play, and delivery services Coupang Eats and Coupang Flex. Hyperconnect, on the other hand, took a different route, starting from a much smaller investment. Unlike Coupang, which was in the spotlight from its launch, Hyperconnect's CEO An Sang-il targeted overseas markets when it launched Azur, a video chat app, in 2014. Azur is better known overseas than in Korea. 95% of its sales come from abroad. There are other Korean unicorns besides Coupang that are preparing to go public overseas. Toss, which started as a simple payment app before entering the securities and IT sectors, is looking to go public on both the US and Hong Kong markets. Currently, the Korean market is led by first-generation IT companies, including Naver, Kakao, NCSoft, and Netmarble. Unicorn IT companies founded in the so-called mobile revolution era around 2010, which have been growing for 10 years, are preparing to go public in the Korean market. They include Sokar, the first mobile unicorn, and app companies Yeolnoja and Zigbang. Krafton, the developer of video game series PlayerUnknown's Battlegrounds, a much anticipated IPO also. The South Korean government said it will inject 1 trillion Korean won, which is about $924 million, into homegrown venture capital funds, with a plan to launch 3 VC funds expected to raise up to 4 trillion Korean won in aggregate. This first injection is part of a 5-year government plan announced recently, under which 20 trillion Korean won, which is about $18 billion worth of homegrown VC funds, will be set up jointly with asset managers by 2025 to invest in contactless, digital, and environmentally friendly businesses. 2 state-run institutions, the Korea Development Bank, KDB, and Korea Growth Investment Corporation, will take charge of the government investment to launch the funds. Asset managers will be responsible for drawing additional money from other investors to top up the funds. Specifically, the 1 trillion Korean won earmarked for initial funding will be funneled into 3 funds: a 2.2 trillion Korean won corporate investment vehicle, a 600 billion won infrastructure vehicle, and a 200 billion won vehicle open to individual investors. They will raise the remaining 2 trillion Korean won to 3 trillion Korean won from the private sector within a year. Backed by policy money, domestic VC funds in South Korea have grown in size over the past few years. In 2020 alone, a total of 17 funds raised more than 100 billion Korean won respectively, compared to 14 trillion won in 2018. In aggregate, the 17 funds drew 3 trillion won, accounting for about 70% of the estimated 4 trillion won raised by Korean VC funds last year. Their growing size is likely to encourage them to venture into late-stage deals, pre-IPO investments, and secondary transactions dominated by other global rivals. Their active investment in broader stages of investments will likely push more Korean startups closer to the status of unicorn or a private company with an enterprise value of more than 1 trillion Korean won. Among the existing VC funds, over 30 funds have raised more than 100 billion Korean won. The increasing number of larger funds means the market landscape will change significantly. Atnium Investment, known for concentrating only on one fund, raised 500 billion Korean won last year, the biggest ever fundraiser by a domestic VC fund in South Korea. Since venture capital investments were introduced in South Korea in the 1980s, a total of 58 VC funds have raised more than 100 billion Korean won respectively. Among them, over 60% or 37 funds were launched between 2018 and 2020. But can the startup economy deliver? Like everything in South Korea, its development has been swift. When Coupang was founded in 2010, the country barely had a startup industry. Just 5 years ago, there were only 80 startups that had raised more than 1 million from investors. Today, there are nearly 700, including around 200 that have raised more than 10 million and 10 unicorns valued at more than 1 billion. Coupang is valued at more than 9 billion. In 2019, investors poured more than 4 trillion Korean won, which is about $3.3 billion of venture capital into South Korean startups, triple the amount they invested in 2013. For now, startups in South Korea are a long way from replacing large conglomerates as the engine of growth. Their share of the economy remains tiny. The total of venture capital that flowed into the industry in 2019 was just over half of Samsung Electronics' profit in the final quarter of the year, and Samsung had a bad year. Venture capital investment accounted for 0.36% of GDP in 2018, according to data from the Korean Venture Capital Association, higher than the estimate for China at 0.26%, but trailing the United States and Israel at 0.64% and 1.75% respectively. The dominant source of startup funding in South Korea remains venture capital, accounting for about 81% of total capital raised, with a remarkable 67% of it coming from abroad. 32%, or about 4.5 billion, comes from Japan, 28%, 3.8 billion from US-based investors, 7% from China, and 2% from the rest of the world. Domestic investors account for 27% of capital. The remaining 4% is not declared. IPOs contribute for about 19% of the total funding. 53 startups from the Korean Peninsula, which is about 8.2% total, went public, having raised about 3.3 billion in total equity. The amount of exits through IPO is larger than any other European country, making South Korea a new center of gravity for unicorn startups. But startups don't need to replace conglomerates to boost growth. It's hoped that they can spread more of their attitude towards innovation and digital technology to traditional parts of the economy, improving productivity across the board. All the data seems to point in the same direction. The very visible government's effort to create a healthy, growing, and self-sustainable startup ecosystem seems to be paying off. Korea has always been ranked as one of the world's most innovative economies, according to the Global Innovation Index. The growing number of Korean unicorns and the blossoming of Korea's venture ecosystem the trend represents comes as nations around the world look increasingly towards startups to provide fresh growth engines in the innovation economy. South Korea's startup economy is now delivering. That's all for this week's show. Follow me on Twitter or LinkedIn at Idea Explorer or my website ideaexplorer.com. Feel free to leave comments or suggestions about the show and tune in next week for more news and trends about Korea technology.